What is going on out there, peeps? Okay, so I want to show you guys a couple of things when it comes to. We're going to talk about the bail-in again because I want to make sure that you guys understand what's very highly possible going to happen, and you guys need to be prepared for this. All right, so again, once again, I'm going to talk about the bail-in, but also precious metals are on the move as well as cryptocurrencies. We will talk about that as well. Speaking of precious metals, if you're considering buying some, give our friends over there at Money Metal Exchange a consideration. The link is in the description. If you buy more than $100 worth of precious metals, use promo code Pimpy, P-I-M-P-Y, and get a free half ounce of silver. If you already got your half ounce, you don't get any more. We have Pimpy's investment chat. Same name as the YouTube channel. Over here, we talk about investment opportunities, gold, silver, cryptocurrencies, as well as foreign currency investments. No politics. You guys can bring the politics over to here, which is the hidden things in front of your eyes. Over here, we do talk about politics, QAnon, NESARA, GESARA, as well as current events, 9/11, false flag events, all that fun-loving stuff. Just be respectful of one another. If you don't have Facebook, I do have a Twitter account. The link is in the description. Come on over and join me there. A quick look at what's going on. As usual, I told you when it comes to investments, they go up and down a lot, especially cryptocurrencies, man. Especially cryptocurrencies. These things here will give you a heart attack. They have the biggest swings of all investments. They will give you a heart attack. So that's why I'm saying if you invest in cryptocurrencies, make sure you put your money in there. Just leave it alone. Pick the ones you like and leave it alone. All right, because if you keep watching it every day, it'll drive you crazy. All right, if you're thinking about buying cryptocurrencies, I do have a link in the description. Just follow it. Just for signing up, that will give you $10 free. And then after a while, you can earn up to about $100 worth of free cryptos if you go down to the part that says earn free cryptos. So check it out. Gold and silver starting to go up a little bit. Again, they're still attached to the market, which I'm not a fan of. But nevertheless, back on the rise. Look at gold almost back up to 1900 and silver almost back up to $24. I'd warned you they're going to drop down to about 1800 for gold, maybe 20 for silver. I'm not so sure that's going to happen. It looks like they're going back up. Okay? So now's a good time. Talk about buy on a dip. This is way cheaper than it was, even a week ago. All right? So now's the time to add to that. Some unrelated to the market news, but I'm very pumped about. As a person who's a numismatic collector, I collect coins. So the House approved for 2021 the minting of the Morgan and Peace dollars. Now keep in mind, these are not commemorative coins like they usually are. These will actually be coins that are minted. And Morgan dollars to me are just gorgeous coins. So it is. The House of Representatives on the 22nd passed a proposed legislation seeking multiple coins marking the centennial anniversary in 2021 of the transition from the silver dollar production of the Morgan to the Peace dollar, which is good. Both these coins are collectibles. I love them. The Morgan dollars to me are gorgeous. So when I saw this article, I was pumped. All right, so these are not commemorative. Keep in mind, these are going to be actual coins. They'll be minted that you could buy. Just like you can the Eagle, you could buy the Morgan. Now, I don't mind the Eagle coins, but I'm a bigger fan of the Morgan. So when the time comes, I'm going to be buying Morgan coins, just stacking up on them bad boys. All right, so I don't know when they're coming out. What does it say? A mirror bill in the Senate was introduced in July 27, 2020. Okay, so I'm not sure when they're coming out. All I know is I'm definitely going to be looking for them. So there will be uncirculated versions of the 2021 Peace dollars, which is struck in Philadelphia. That's a good thing. So they're going to be in Philadelphia, San Francisco, as well as the Denver Mints will all be pumping these out. And these coins are supposed to have what's called a privy mark on them. Privy marks are big. Privy marks are, I don't know how to explain it. They're usually limited edition coins. So these aren't commemorative this time. These are literal dollars that the mint is going to be making all over again. They're going back to the Morgan dollars and they're going back to the Peace dollars. And I can't be more thrilled than I am. Okay? The Morgan dollars to me are gorgeous. So I'm excited about that. So not to get too distracted, I just want to talk about it. Again, I keep telling you, the dollar is going to crash. I think it's going to crash sooner than this, but just in case, let's see. We're going to find out what's happening in October. October is going to tell us a whole lot about what the hell is going on with the U.S. dollar. We know there's a huge meeting with the IMF. The talk is about removing the US dollar as a reserve dollar. But nonetheless, it says this: the US is facing a dollar collapse by the end of 2021, and even over 50% chance of a double dip recession, economist Stephen Roach says. Who's protected? Oh, yeah, I know who's protected. Those who hold personal, physical gold and silver are protected. So just summarize this real quick. It says the US dollar could collapse by the end of 2021. The US has been seen economic output rise briefly and then fall in 8 of the past 11 business cycles recoveries. Grim's second quarter data cannot be dismissed, pointing out that the current account deficit of the United States, which is the broadest measure of international imbalance with the rest of the world, suffered a record deterioration. Roach last predicted a crash in the dollar index in June, in which the trading at about 96. He said at the time it would collapse 35% against other major currencies within the next years. Again, for those of us who are holding on to foreign currencies, once the dollar drops that much in value, guess what? Those other ones gain. So hang tight on those currencies. And this is good news. I mean, it's bad for our economy, but it's good news for those who hold foreign currencies and those who hold precious metals. Okay? So our leverage or hedge against this is holding physical gold and silver. I keep talking about a bail-in. Been talking about it for a long time. Whether or not it's possible here, Lynette Zang, like me and her on the same wave level. My little gold and silver goddess. I keep telling you about Pimpy's University, Lynette Zang would be my gold and silver professor. But now, here, before I get into that, I was watching her video and I happened to glance over. And of course, all my lovely subscribers are chiming in. I love it. I'm watching here and all of a sudden it says something about Pimpy. And I said, what's going on? And I noticed that my name was mentioned several times. It says, Pimpy sent me. And it goes on. It says, yeah, Pimpy sent me. It goes on right here. Yeah. Know about you through Pimpy. Love your channel. And it's happening here. So anyways, the people inside here are saying, hey, Pimpy's friends. And then there's a lot of back and forth from people who watch my channel and then went over to watch hers. So it was exciting to see. I love the way you guys were saying, hey, we're coming to check you out. Pimpy sent us. That makes me really pumped. I was happy to see that. I was happy to see them responding back. We are working on doing a live interview, or if not, a pre-recorded interview with Lynette Zang. I'm going to get that out. Before I do, what I'll do is ask you guys what kind of questions you want me to ask her, and I'll put a list of them together based on the amount of time she has. We will do what we can to make sure they all get addressed. Okay? So I'm pumped about that. But I want you guys to listen. Again, I tell you guys one thing, but I want you guys to also hear from other people. So it's not just me blowing smoke up your tuchus. You guys are hearing that. Other people are saying the same thing. All I'm saying is just be aware of this. Be cautious of this. All right? So as she continues to talk for the next few minutes or so, I'm not going to cover the whole thing because it's a good, and I will leave the link to this particular YouTube show, this particular video, because there is a lot of information in there you should know about. So this is talking about a bail-in. It's talking about your money just sitting in the bank. This affects your IRAs, your 401ks, the whole 9 yards. So I want you to listen to what she's saying closely, and I will intervene from time to time and make a comment. Here we go.
Can you do that today? Not really. You may get a personal banker, but I got to tell you, my own personal experience recently with Chase Bank is that you've got to make an appointment to go in there. And when they screw it up, you can't get a hold of anybody.
Yeah.
You have no recourse. Anybody else experiencing anything like that?
Yes, I can answer that question. There are several of you in the group telling me that you're having all kinds of problems with your banks. It's becoming a real pain in the ass. They're trying to restrict what you can do. Like she's going to tell you, they won't even allow you to wire, some banks anymore, wire money out. This is dangerous. It's your money, but they're trying to tell you what you can and can't do. What they're doing is they're limiting the outflow of their money. They know something big's coming, and they want to restrict what you're going to do with your money. so that there's no run on the bank.
At the bank, where they are just taking over more and more control, not allowing you to send a wire, determining whether or not you know what you're doing. I'm telling you, this is not good to hold all of your wealth inside of this fiat money system. It is easy to make it disappear. Poof.
Yeah.
But okay, a viewer.
Okay, so now we're going to get into the important part. I told you guys what happened in Cyprus. I talked about this a while back, and so I got excited when I heard Lynette Zang talking about it as well, but she isn't the only one. Everybody that saw what happened in Cyprus back in 2013 believes it was a test run. They do this. There's several test runs going on. Lynette's going to cover the fact that not only did Cyprus have a bail-in, but other countries have too. So don't think that it won't happen here. What they're doing is they're doing test runs everywhere to see how much they can get away with, and then they want to fine-tune what they can get away with is what it is. Every time something like this happens, the entire international community should raise holy hell, keeping the banks from doing this. They are the minority. We are the majority. You need to speak the hell up. Okay? So we're going to cover the FDIC because I told you what happened to Cyprus is they took all their money, all of it. When the international community raised hell about it, they at least returned the amount of money that was covered by the FDIC is what they did. And then they taxed them 6% on that money. So if you had $6 million in the bank, I believe over in Cyprus, you were insured up to $125,000. So at least out of your $6 million, you got $125,000 back. How nice of them, huh? Yeah. Do you get what I'm talking about? You see what I'm saying? Why physical gold and silver is important to have? But Lynette brings up something very interesting about the FDIC here in the United States. You need to listen.
Recently sent in this March 18, 2020 letter from the FDIC. And in that, he assured everybody, this was from the legal division of the FDIC, customers' deposit would be fully insured up to that $250,000 limit. So I would really encourage you not to hold more than that in any one bank.
Notice Lynette said hold any more than that in any one bank. I did a video talking to you guys about one thing called a CDARS account. All right, so for those of you who don't know what a CDARS is, let me see if I can find it real quick. CDARS, not CDARS, CDARS accounts. Okay, so what CDARS is this? It's one bank where you could go into and they figure out how much you want to deposit and they break it up into multiple banks. So in other words, let's say you have $1 million you want to deposit, but the FDIC only covers up to $250,000. Well, just to make sure you're covered, they'll deposit your money and create 5 accounts at $200,000 per bank account so that you're under the insured amount. So that if a bail-in happens, all of your money's covered because your deposits are below the FDIC limit in multiple accounts. That is the goal of CDARS. All right, I spoke about this before. It's called CDARS accounts. It's a good way to hide your money or to protect your money because each bank is covered by the FDIC up to a certain dollar amount. They make sure that your money is under the limit for all your money. So all your money is protected is the goal. But let's continue to listen to Lynette because what she says is important.
However, I'm going to read this whole thing, so just bear with me on this. A proposed creditor-funded recapitalization, so this is from the Dodd-Frank Act in 2010. Recapitalization mechanism for too big to fail banks that reach the point of failure ensures that shareholders and uninsured private sector creditors of such banks, rather than taxpayers, bear the cost of resolution. This is a template. It's simple. Fully respects, this is from the BIS. I'm sorry, this is from the Bank for International Settlements. Who did a template, which I'm going to show you. fully respects the existing creditor hierarchy and can be applied to any failing entity within a banking group. The mechanism partially writes off creditors to recapitalize the bank over a weekend.
Yes, this happened on a weekend. What happened in Cyprus happened on a weekend. You went to bed, you woke up, your money was gone. There's no announcement. There's no news. They just do it. Those people who had the cash that took it out of the bank and put it in their safe. I told you, these are what rich people do. They don't trust the banks. They don't hold their money in the banks. When they do, they strategically put it in the banks, but they hold very little in there. The money that they hold in the bank is put there strategically and is protected. For the vast majority of them, well, I'm talking about millionaires. Once you start getting up way up there, then I'm not sure how they protect their money. But I know a lot of millionaires, they keep their money in their house, in a safe. That's not BS. I've seen a lot of people do that. All right? That's because it protects them from any kind of bail-in. How can you take the money from me if I don't have it in my account, but I have it in my safe? For me, I put it in precious metals. I told you I have 6 months worth of bill money plus 10% for miscellaneous cash on hand, just in case. So if a bail-in happens, it doesn't affect me. I don't have any money in my bank account. The money I have in there is to protect or is to pay my bills, and that's it. Nothing else. Okay? So what the bail-in policy says is any bank that has more than $50 billion in assets is subject to getting of the bail-in. So you want to make sure that your bank doesn't have more than $50 billion in assets. All right? That's one way you might be able to protect yourself. CDAR accounts might be another way you can protect yourself. But even now, I'm not convinced. Let's listen more to what Lynette has to say.
Providing them with immediate certainty on the maximum loss. So, okay, if you know how much you're going to lose, then you don't change behavior. They also talk about one-off events because if they take your money in a one-off event, you trust that they're not going to do it again. I don't trust them, but okay. The bank is subsequently sold in a manner that enables the market to determine the ultimate losses to creditors, right? So bail-in, they give you shares in the failing institution. What value do they have? Poof, you're gone. As such, the mechanism can eliminate moral hazard throughout a banking group in a cost-efficient way that also limits the risk to financial stability. The credit, because you and I are not too big to fail. The creditor-funded mechanism is contrasted with other recapitalization approaches, including bail-in and single point of entry strategies. Let's look at what that looks like. Now, remember, you've got all the links. You can read this. You can look at it for yourself. If somehow you manage to draw a different conclusion than I have, rock and roll hoochie coo.
Well, now, me and Lynette Zang have a lot in common. We put the links in our description so that you can go and see for yourself what we are looking at. That's what we do. See, just don't take our word for it. We want you to go and do your own research. That's why we leave the links. Like Lynette said, when I go do and I read what I'm doing, maybe I might be reading it wrong. You might read it another way. We have a dialogue. That's how we all move together in the same boat. Right? She's saying the same thing. So again, we have a lot more in common than I thought.
I can't say anything about it. So this is out of that Bank for International Settlements report, and I just did graph 3. Graph 1 shows you what it would look like without insured deposits. But since they tested that in Cyprus and they would get too big of an outcry from it, this is what it looks like with deposit insurance. Now, this is the bank immediately before failure. These are considered assets. So financial instruments, all of those derivatives, all of those, whatever kind of products they put together, mortgage-backed securities, etc. Loans, government bonds, That's what they classify as assets. Now, if this freezes in one part of the system, it goes through the whole system, but okay. Now, what you're looking at here are, this whole area here are the insured deposits. This blue area that I circled is the exposure to write-off. And by the way, where it says deposit insurance scheme, it is a scheme, but that's not my word. They refer to it as a scheme because this scheme was put in place in 1933 to get depositors to trust the banks again. Now, what I also want you to see is the equity of the bank. So remember how we were talking about all of that leverage to begin with? You've got all of this debt and these obligations sitting on an itty bitty bit of equity. So when all of these assets or some of these assets decline in value, okay, it eats up the equity in the bank. That's why they have to bail in your deposits. But personally, I think we're going to see a combination of the two. Bail in and bail out with taxpayer money. So that's basically what the bank looks like immediately before failure. This itty bitty bit of equity that they have leveraged and leveraged and leveraged. Just don't change behavior, just change the rules so people think it's okay. Okay, this is what it looks like after the weekend, right? I love it. They specifically say,
You know why they do it on a weekend, right? Because the banks are closed. This way you can't rush over and protect yourself.
recapitalization over the weekend. Ba-bam! This is what the bank looks like after capitalization. So this is that deposit insurance. So I think the taxpayers would probably be paying that.
Yep.
What do you think? Or the other banks might be paying that. Depends on if there's money inside of the FDIC or any of those other deposit insurance schemes to pay this. So we've got to make sure that these assets, all these financial instruments, are intact. That's critically important. Look at how much the equity has grown because they have eaten up, bailed in equity, and even from depositors.
In other words, the money that they took from those who deposited money into the bank. That's how they built equity. They didn't build it, they stole it.
So anything that is above that $250 level in this country would get bailed in. That's also goes.
You hear what she's saying? Any money that you have in your account above the limit of the FDIC is gone. That's considered a bail-in. It's appropriated by the government. Gone. Whoosh. It's important that you know that.
Goes back to those brokered deposits, and the point of it, if you've got $1 million that you want to hold in the bank for some reason, well, $750,000 of it would not be insured in case of a bail-in. So by setting up those brokered deposits, they can split that among 4 banks.
CDAR accounts. That's what she's talking about.
And have those deposits fully insured, but it's still hot money. So I'm hoping that you can see how precarious this whole situation is. But it really gets better than that because they create this new bank holding company, and the bank equity is now owned by a new temporary holding company. Now they have.
Do you understand what we're talking about? We're talking about the bank people. No matter how much they tell you your money is protected, how much you can protect, what you can do with your money, but they also find tricky little ways to screw you out of your money. I can't stress this enough, that you possess your own money through precious metals or in a safe. Do what you need to do. Of course it's risky. It just depends on where you live. For those you can afford to do so, you need to find a way to create a space in which you can hide a big enough safe to protect your wealth. Period.
Have the assets. So that is why you see the equity equal to the assets. But the liability plus the equity, which is right there, okay, that's how it consolidates down, right? This is probably closer to the true value. Now, what if you're holding your money in a bank that goes through this? What do you think that's going to be? Not a good circumstance for anybody that has money in there.
Nope.
And by the way, I might remind you that they can say, well, look, we've insured 250. We're not bailing that in, but they absolutely 100% can limit your access to that money.
So not only are you covered up to $250,000, in Cyprus they got that money back, which at their level was $125,000, but they made it pay 6% taxes on the insured amount, screwing them even more. But what Lynette's saying is, sure, we'll give you guys $250,000, but we're going to tell you what you can do with that money. Really? Seems to me like we've been suckers for way too long and letting the banks get away with way too much.
They tested it in Cyprus. But, these are just few of them. There are even more. All of these bailing in Greece, in Italy, more than once, several times in Italy, in Portugal.
So see, I was talking about the bailing that happened in Cyprus. I didn't know about these other ones. I know Australia is talking about doing it, and I heard Japan did it. But she's showing you that Greece did it, Italy did it twice, Portugal, they all done bail-ins. The BIS, which is the Bank of International Settlement, set the policies for all central banks around the world. Policies about a bail-in. In other words, they're going to take your money to pay for all their bad habits and all of their mistakes.
You got to understand, practice makes perfect, and that could make all of your deposits disappear. But that won't happen, right? That's not going to happen.
Sure.
Because after all,
we
we've
trust
got
the government.
FDIC insurance.
We
and
trust
I'm
the
sure
banks.
that there's plenty of money over at the FDIC to cover all of these deposits.
So even if you do CDARS, I want you to listen to what she's saying. Does the FDIC have enough money to cover every account below the proper limit that should be insured?
The most current DIF report, and again, you got the links, you can go in and look for yourself, was March, just before March 20th. So as this whole crisis was rolling out.
Look at that.
And at that time,
Look at Shiva drinks
they
like I
had
do.
insured deposits, I'm going to round up to make it easy, of about 8.2 trillion. But there was only 113 billion in the fund.
How much more of a clear picture do you need? The total assured amount of all deposits, these are the amount of dollars that are insured. $8.168 trillion is insured. But how much is in the insurance fund to cover all that 8.168 trillion? There's only 113 billion. Do the math. Do you think your full deposit of 250,000 covered by the FDIC will be covered? So not only are they going to take all your money above that amount, not only are they going to tell you what you can and can't do with that money, but now they're telling you, yeah, sorry, it's not our fault. You're insured. Sure you are. We don't have enough money to even cover the amount that's insured. Oops.
So according to the percent of insured deposits, a little bit more than 1%, which basically means that for every $1 of insured deposits that you hold, they have a little bit more than 1 penny to pay you.
For every $1 that's insured, they have just barely a little more than 1 penny that they can pay you. So even if you're FDIC insured, they don't have enough to cover you. I just wanted to share this with you because these are it's very possible. They're already talking about this. This is already being done around the world. These are test cases. They want to see what they can get away with. They'll make one excuse after another to take all your money, take all your wealth from you. That is the goal. They want to push us into this great reset, which is a new world order, one world economy. It's a socialist economy. They don't want you to save money. Don't you get it? They want you to keep spending. They want you relying on the government at all costs. Anyways, I just wanted to share this with you. I know it sucketh, but I just want you to be safe. I want you to be prepared. For you people who got 401ks, got IRAs, got stocks, got money in a banking account, you're really, really risking everything. I always suggest that you take about 25 to 30% and move it into precious metals. It's for your own protection. If so, give a consideration to our friends at Money Metals, okay? All right, that's it for now. I just wanted to share this information with you. When I seen Lynette Zang talking about the bail-in, I thought, woo, that's what I'm talking about. It's more than one person talking about it. All right? So if you like the video, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later.